Welcome to Property Insurance Decoded, brought to you by the Louis Law Group. I'm James, and I'm joined by my co-host Maria. Today we're taking a deep dive into a critical topic for Florida homeowners: navigating property damage claims with Progressive Select Insurance. We'll walk you through the step-by-step claims process, from the importance of thoroughly documenting your damage right away to meeting with an adjuster. We'll also uncover how to spot bad faith practices if your claim is unfairly delayed or denied, and discuss the legal tools you have to fight back against lowball settlement offers. Let's get right into it.
Yeah, so imagine surviving a Category 4 hurricane.
Right.
But,
I mean, that's stressful enough on its own.
exactly.
Yeah.
You finally step out your front door and you realize the real storm is, it's just starting.
The insurance storm.
Right, the second storm.
Wow.
Because that arrives the second a field adjuster walks onto your property. They've got a clipboard, a flashlight, and a corporate mandate to, pay you as little as legally possible. Yeah. So to survive that process with Progressive Select, and just to clarify, they operate strictly as a Florida domiciled property carrier.
Right, so this is completely separate from the auto insurance commercials you see on TV.
Exactly, totally separate division. Their entire claims apparatus is built to minimize payouts. So you really need a tactical playbook. You got to know how to build an impenetrable case from day one.
And building that case, I mean, it really starts before you even pick up the phone to call them, right?
Oh, absolutely. The exact second the storm passes or the fire's out.
I always think of it like an active crime scene. Like you are the lead detective.
That is the perfect way to look at it.
Because your instinct is always to clean up. You see debris in your living room, and your immediate instinct is to grab a trash bag and start tossing things.
Right, you want your house back to normal.
Exactly.
Yeah.
But every piece of ruined drywall, every soaked baseboard, that's all evidence.
It's vital evidence. Before you touch a single thing, you have to capture the scene.
Unless, of course, you're trying to prevent further damage, like tarping a roof or setting up fans.
Right, and actually, that's a legal requirement.
Oh, really?
Yeah, Florida policies impose what's called a duty to mitigate. So if you just let water sit there and it causes secondary mold, they won't cover that mold. You have to stop the bleeding.
Makes sense. But capturing the scene requires way more than just, snapping a few dark photos on your phone.
So much more. You are building a verifiable timeline. So when you pull out your phone, switch it to video.
Okay.
Turn on the time and date stamp. Walk through the house and literally narrate what you are seeing. Tell the camera it's 9 a.m. Tuesday. Water is actively dripping from the master bedroom ceiling fixture.
I love that. And I always suggest matching that on-site documentation with external data, too.
Oh, yeah, like what?
Well, an insurer might look at roof damage and argue, oh, that's been there for years.
Classic move.
Right. So you pull up NOAA's storm records for your specific zip code. You pull local news clips from that exact day.
Oh, that's smart.
And dig out pre-loss photos. If you took a picture of your kids in the backyard a month ago and the roof looks perfect in the background.
You just destroyed their pre-existing damage argument.
Exactly.
And let's talk about why this level of evidence is so crucial when you actually dial the Progressive Claims hotline.
Before you even call that 1-800 number, you have to know your policy.
Right. Specifically, whether you have open perils or named perils coverage, because that dictates the entire burden of proof.
Let's break that down, because I know that terminology trips people up.
It really does.
So if you have a named perils policy, the contract basically lists the specific disasters they cover. So say wind, fire, and hail.
Right. And if the disaster isn't on that list, you get nothing.
Right. And it's on you to prove the damage was caused by one of those specific events on the list.
Exactly. But open perils is the exact opposite.
It covers absolutely everything unless the policy specifically excludes it, right?
Yes. And under open perils, the burden actually shifts to the insurance company. They have to prove an exclusion applies.
That shift is huge.
It's everything. If you have an open perils policy and a storm tears off your roof, Progressive Select has to find a specific exclusion like earth movement or a certain type of water damage to deny the claim.
So if your initial documentation is airtight, showing clear wind uplift on the shingles.
You cut off their escape routes. They can't just pivot and blame an excluded peril when you have a 4K video showing wind damage happening in real time.
Okay, so you've built the timeline, you've got the evidence, and you've called it in. Now you have to face the person actually holding the checkbook, the adjuster.
Here we go.
I want to ask a slightly naive question here. Isn't the adjuster sent by the insurance company coming over to, help you figure out how much you need to fix your home?
I mean, that is what they want you to think.
Yeah.
But no, The field adjuster works for Progressive Select,
Right.
and they are trained to miss details to keep that settlement as low as possible.
How do they do that during the walkthrough? Like, what specific tricks are they using?
Mostly through categorization. So they'll look at a water stain and classify it as long-term seepage rather than a sudden accidental discharge from the storm.
Because long-term seepage is excluded under poor maintenance.
Exactly. Or they'll look at wind-creased shingles and claim it's just normal wear and tear from age.
Unbelievable.
Yeah. They might take photos from weird angles that make structural sagging look less pronounced, or just straight up omit ancillary damage like wet insulation hidden behind the drywall.
Knowing that, letting the adjuster just wander your house unsupervised is a massive mistake.
Huge mistake. You have to shatter them.
If they walk past a damaged window casing without writing it down, you stop them.
Point it out, make sure it goes in their notes.
And this really brings up the strategy of independent estimates, because letting the insurance company's guy be the only one putting a dollar figure on your tragedy?
Makes absolutely no sense.
Right.
None at all. This is where you bring in your own experts before you ever agree to a number. You need a licensed Florida contractor, someone who actually swings hammers and buys materials in your specific zip code to write up a detailed line item estimate for the repairs.
Because the adjuster is just using standardized estimating software, right?
Yeah, software that often lags way behind real-world costs, especially after a regional disaster when the price of plywood and roofing labor just skyrockets.
And Florida law also gives homeowners a really specific tool here under statute 627.7074, the right to hire a public adjuster.
Yes, this is a game changer.
You can hire your own licensed adjuster who works strictly for you. They just take a percentage of the recovery.
Right, and Progressive Select cannot stop you from doing this, and they can't penalize you for it either.
Sometimes just having a professional who speaks their exact language levels the playing field.
It changes the entire dynamic. The insurance adjuster realizes they aren't dealing with an overwhelmed homeowner anymore. They're dealing with a peer.
Someone who knows the estimating software just as well as they do.
Exactly. But honestly, whether you use a public adjuster or just rely on multiple contractor bids, the golden rule is the same. Never sign a release or accept a settlement check as final payment until you have cross-checked their offer against independent numbers.
Because the moment you sign a release,
You surrender all your leverage. Getting more money after that is almost impossible.
let's talk about the phase of the claim that drives people the absolute craziest.
Oh, the waiting game.
The waiting game. The adjuster leaves your driveway in crickets, your house is half destroyed, you've got tarps flapping in the wind, you're living out of suitcases, and the massive corporation just goes totally silent.
It's an overwhelming feeling of powerlessness.
But Florida actually has very specific mechanisms to prevent insurers from starving you out through delays, don't they?
They absolutely do. You aren't actually powerless. There is a legal clock ticking governed by strict statutory deadlines.
Let's walk through those numbers.
Okay, so Florida statute 627.70131 requires an insurance company to acknowledge your claim within 14 days of you reporting it.
Just to acknowledge it.
Right. Then they have to begin their actual investigation within 30 days. And the big one, they must either pay the claim or issue a formal denial within 90 days.
90 days of receiving the full proof of loss.
Correct.
And I want to emphasize that these aren't just polite suggestions. If Progressive Select blows past that 90-day mark without a valid reason, they aren't just guilty of bad customer service,
No, they are breaking state law.
which completely shifts the power dynamic back to you.
It gives you incredible leverage. If they violate those timelines, they open themselves up to bad faith claims, meaning they could be on the hook not just for the damage to your home, but for severe statutory penalties and potentially your attorney's fees.
So if you casually mention in an email that day 85 is approaching,
Oh, your file suddenly moves to the top of the pile. Guaranteed.
while we're on the topic of Florida-specific leverage, we have to talk about the valued policy law, or VPL.
Yes.
A massive protection, because this completely rewrites the rules if a home is totally destroyed. If a Category 5 hurricane wipes a house completely off its foundation, the standard depreciation arguments just go out the window, right?
Totally out the window. So let's say you have a policy limit of $500,000 on your home.
Okay.
Over the years, the structure ages, the roof gets old, the kitchen is outdated. If the house is totally destroyed by a covered peril, Progressive Select might want to say, well, the actual cash value of this old house is only $300,000, so that's all we owe.
But the VPL stops that.
Dead in its tracks. It mandates that if the home is a total loss from a covered hurricane, The insurer must pay the full face value of the policy.
The entire $500,000.
Exactly, regardless of actual cash value.
Which makes sense. It prevents them from collecting premiums on a $500,000 policy for 10 years, only to suddenly claim the house was never worth that much.
Exactly. But total losses are rare. The vast majority of claims involve partial damage.
A ruined roof, flooded floors.
Right. And that is where the settlement offers come in. Let's say you get to day 80 of that statutory window. An envelope arrives. It's an offer, but the check is a fraction of what your contractor says the repairs will actually cost.
The classic lowball.
The low ball.
To understand how they arrived at that lowball, we really have to look at the difference between actual cash value, or ACV, and replacement cost value, or RCV.
Yes, policyholders get blindsided by this all the time.
I always use a car analogy to explain it. If you total a heavily used 10-year-old car, the actual cash value is essentially the Kelley Blue Book price.
Right.
They hand you a check for a 10-year-old car, which is nowhere near enough money to go buy a brand new one off the lot.
Not even close.
But replacement cost value, RCV, is what it actually costs to buy a brand new equivalent today.
Exactly. And in property insurance, insurers constantly try to pay out ACV. They take massive deductions for the age of your roof or flooring, even if you paid for an RCV policy.
And applying excessive depreciation like that just to drive down the payout, that's a textbook bad faith practice, isn't it?
Oh, textbook. Another common bad faith tactic is agreeing that the storm damaged the roof, but denying the resulting water damage inside the house by claiming you didn't tarp it fast enough.
Weaponizing that duty to mitigate against you.
Exactly. Or they'll just use an outdated pricing database. They'll say, drywall costs $20 a sheet when every supplier in Florida is currently charging $40.
So when you get that lowball or a denial, what is the mechanism to fight back? Because yelling at the adjuster on the phone accomplishes nothing.
Nothing at all.
We have actual legal tools to force their hand. If it's a dispute over the cost of repairs, you can invoke the appraisal clause. Let's explore how that actually works.
The appraisal clause is one of your most potent weapons. It takes the decision completely away from the insurer. If you and Progressive are miles apart on the repair cost, you invoke appraisal.
Meaning you hire your own independent appraiser.
And Progressive has to hire theirs. Those two appraisers get together to evaluate the damage.
And if they can't agree?
They submit their differences to a neutral third-party umpire. If the umpire and either one of the appraisers agree on a figure, that decision is binding.
The insurance company just has to pay it.
Yep. It bypasses the entire internal claims hierarchy of the insurer.
But what if it's not just a disagreement on price? What if they are actively acting in bad faith? Like unreasonably delaying the claim, ignoring your contractor's estimates, or straight up misrepresenting the policy terms?
That is when you bring out the heavy artillery, the civil remedy notice.
It's a CRN.
Yes. A CRN is a formal document filed with the Florida Department of Financial Services. You are essentially alerting the state that the insurance company is violating the law.
Okay.
But the real power of the CRN is the timeline it creates. Filing it triggers a 60-day window.
Giving the insurer exactly 60 days to cure the bad faith.
Right, meaning they have to pay what is owed or fix the issue.
And the reason that 60-day window makes the insurance companies sweat is the threat of what happens on day 61. Because if they don't cure the problem, you now have the right to sue them for bad faith under Florida Statute 624.155.
And in a bad faith lawsuit, they aren't just fighting over the cost of a new roof anymore.
No.
They are suddenly facing the prospect of paying your attorney's fees, court costs, and potentially massive punitive damages.
Wow.
Yeah. When a CRN lands on a desk, it usually gets escalated straight past the field adjuster and up to the legal department. They have to do a harsh risk assessment. It is incredible leverage.
So we've built our strategy so far mostly around standard carriers, like Progressive Select, dealing with perils like wind and fire.
Right.
But if you live in Florida, you face a very real threat from a peril that standard carriers almost universally exclude. Floodwaters. Or you might have substantial marine assets, like a boat. And when you step into the world of flood and marine insurance, you are often leaving standard carriers behind and dealing with surplus lines insurers.
Yes, specialty carriers.
And looking at our sources, Great Lakes Insurance SE is a massive player in this space here in Florida.
Huge player.
They're a subsidiary of Zurich, headquartered in Germany, and they write a huge amount of private flood and marine policies. But they are categorized as a non-admitted surplus lines carrier.
Right.
I want to unpack that because it sounds like a technicality, but it fundamentally changes the rule book for you. Why do these surplus lines even exist?
Basically, surplus lines exist to take on risks that standard admitted carriers won't touch.
Okay.
Progressive might happily insure a home against wind, but they want absolutely nothing to do with flood risk in a coastal zone or the liability of $1 million yacht. So, surplus lines step in.
But there's a trade-off.
A huge trade-off: regulatory freedom. Non-admitted carriers like Great Lakes don't have to get their rates approved by the state in the same way.
Wow.
And critically, they are not backed by the Florida Insurance Guarantee Association.
FIGA. So wait, if a standard carrier goes bankrupt after a massive hurricane, the state steps in to pay your claim.
Right, but if Great Lakes goes insolvent, that safety net does not exist.
That's a really sobering reality. And that lack of strict oversight seems to extend to how aggressively they can enforce their policy conditions, too.
Oh, incredibly aggressively. The margin for error on your side is virtually zero.
For example, dealing with Great Lakes often involves a mandatory sworn proof of loss.
Yes, and it's not just filling out a quick form online. It is a notarized, legally binding document detailing the exact dollar amount you are claiming.
And you usually have a hard deadline, right? Like 60 to 90 days to submit it.
Yes, and if you miss that deadline by a single day or make a technical error on the notarization, they will use it as grounds for total denial. They do not offer grace periods.
That is brutal. And if your claim involves a vessel, say, a boat damaged at a marina, the complexity multiplies exponentially.
Oh, yeah, because you are no longer just dealing with Florida state law.
Right. Federal admiralty and maritime law comes into play. How does that actually upend the protections a Florida resident might think they have?
Well, federal maritime law can completely preempt state law. Many Great Lakes marine policies contain strict choice of law and venue provisions.
Meaning, if you have a dispute over your sunken boat in Miami.
The contract might dictate that federal maritime law governs the dispute, not consumer-friendly Florida statutes. The policy might even require that any lawsuit or arbitration take place in New York or under the laws of a completely foreign jurisdiction.
You're fighting on their turf by their rules.
Exactly. Furthermore, maritime law heavily favors the doctrine of uberame fide, which means utmost good faith.
Utmost good faith. What does that mean in practice?
It means if you failed to disclose even a minor modification to your boat years ago, they can void the entire policy from inception the moment you file a claim.
So the level of scrutiny is intense. They will aggressively pursue wear and tear arguments on boats, claiming a fitting failed because of galvanic corrosion, not the hurricane storm surge.
Exactly, which really highlights why getting an independent marine surveyor on the dock the morning after the storm is just as vital as getting a roofing contractor for your house.
Wow. So the overarching lesson here is that whether you are fighting Progressive Select over a windblown roof or Great Lakes over a flooded living room, the foundational strategy is actually identical.
Exactly the same. You have to know your exact policy limits and exclusions before disaster strikes. You have to independently verify every dollar amount an adjuster suggests.
And you have to wield statutory deadlines and legal tools like the appraisal clause and the CRN to force them to honor the contract.
Absolutely.
Well, we've laid out a really comprehensive playbook today. We started with the critical first 48 hours, treating the damage like a crime scene to build an undeniable timeline of evidence.
Right.
We exposed the tactics adjusters use during inspections to minimize payouts and how independent contractors act as your shield. We broke down the mechanics of Florida's strict 1430 and 90-day deadlines.
So important.
And how tools like the valued policy law and the civil remedy notice create actual legal leverage to fight bad faith and lowball offers. And finally, we looked at the unique high-stakes arena of surplus lines carriers like Great Lakes.
It's a lot of information, but when you look at all these moving parts, the exhausting documentation, the rigid deadlines, the complex appraisal processes, the confusing letters, I really want you to consider a broader perspective before we wrap up today.
Look up.
Consider the possibility that the entire architecture of insurance bureaucracy might be designed around a concept called policyholder attrition.
Policyholder attrition.
Yes. The system basically banks on the statistical likelihood that if the process is tedious enough, confusing enough, and drawn out long enough, a huge percentage of people will simply get overwhelmed, accept the first lowball check they are offered, and just walk away. It is a highly calculated, incredibly profitable business model. So by simply mastering the statutory deadlines we discussed, by documenting your damage properly, and by legally challenging their offers, you have to ask yourself, are you simply settling a claim, or are you actually breaking the machinery of their attrition model.
That is a fascinating way to look at it. Breaking their most profitable business model just by knowing your rights.
Exactly.
Well, that is a powerful thought to end on. Thanks for joining us on this deep dive, and stay vigilant out there.